99% of traders are losing money right now simply because they don't have a strategy. And to make matters worse, even if they have a strategy, they can't follow that strategy on each and every trade. But there's many reasons for that. But in this video, I'm going to show you a strategy that you can start using today for you to start making money in any market that you want to trade. And also I'm going to show you how to stick to that strategy even if things are not going to plan. Right, let me start off by showing you the strategy that you can start using today. So I learned this from one of the biggest YouTubers on forex trading. There is a formula called the CEST formula. CEST formula, right? And CEST formula is something that you need to see, that you need to put in place when creating any strategy, right? And the CEST formula starts with the C, which stands for conditions, right? What are the conditions that you need to see before you think of placing a trade? When you look into the market, you need to see at once, am I seeing any conditions that I can place my trades right now, right? And then the E stands for the entry. What is it that triggers you to place that trade, to buy or sell, right? And then we have the S for stops. What is the stop loss, right? What is that zone when you say, okay, if the market comes to this place, I'm wrong in my analysis and I want to get out of the trade? And then lastly, we have the T, which stands for targets. What is it that you need to see to take profit, or what is your take profit in relation to your stop loss, right? So in this strategy, I'll start off by explaining the C. The C is the conditions. What is the conditions that we need to see for us to place our trades, right? The first condition that we want to see is to identify the trend, right? You want to identify the trend. And there's two ways that you can use to identify the trend. The easiest one is just putting the 200 period moving average right here. So go to moving average and then you put period 200, and let me put color to blue, and then you're going to see the period moving average right here. So we know that when the market is below the 200 period moving average, the market is in a downtrend, and when the market is above the 200 period moving average, the market is in a trend, right? Or you can even use the 50 period moving average, just like this. You go to put the 50 and you're going to see it works the same way, but now you are catching short-term trends, right? But the best way to look into the market for trends is being able to read price action, which means you need to be able to read higher highs and lower highs, right? So if you can read these higher highs here and lower highs, this is the best way to read the trend with price action, right? And it's simple to read a trend. All you need to do is identify your higher highs and lower highs. So you want to see first an impulsive move, right? So we call this an impulsive move, and then we call this a pullback, right? So when the market makes an impulsive move and pulls back, you want to mark this zone right here. Once you mark this zone right here, this zone is where you want to be placing your next trade, around this zone right here. So you are looking in the market, and then you are going to see this the market making a pullback and creating another impulsive move. And if this impulsive move here breaks past this zone, it creates a new higher high. Now we have a higher high here, we have a higher high this point right here. So we have the here and here, and then you see the pullback, another lower high here, call this a lower high, right? And then at this point right here, you want to see the market again moving, creating another impulsive move. This is how you read a trend, all right? So once you know how to read the trend, I have all this in depth in our Trading with Tan training program. This is the first course that you go through, knowing exactly how to read the trends in depth. If you want to check out that course, you contact me. I'll put the link in the description of this video, right? So the next thing that you want to do is identify your key levels. We are still on the conditions, right? Remember, we are still on the conditions. We are going to go to the entry, we are going to go to the stops, we are going to go to the targets. So pay attention. On the conditions, first you want to identify the trend. So if the trend is up, you are seeing higher highs and lower highs, and you are looking to buy. At any point, you are always looking to buy. And then you want to see if the trend is down, you are seeing lower lows, and higher lows. And at this point, you are only looking to sell. So once you identify the trend, the next conditions that what you want is you want to mark out your key levels, right? So what is your key levels? Your key levels is at any point in an uptrend where the market created a pullback from. So for example, in this case, the market move here and makes a pullback. So what is my key level? Is this point right here. This point right here, you can see the market makes a move and pulls back, and then we mark this zone, right? You put your rectangle 2 and you mark this zone, and then you are looking again if the market breaks to the upside, right? If it breaks this zone here, right, and makes another pullback, what you want to do here is you are marking this zone, right? You are marking this zone right here. So you are marking these zones. These are the zones these are the zones that we call the optimum trading zones, and these are the most likely points for you to place your trade, right? So now you now have the conditions. You have your market in an uptrend, and you have marked your key zones, right? Just like here, right? So now let's move on to the entry. So we have the C, now we are on the E. So let's go to the entry. What is it that you need to see when you want to enter the market, right? You want to wait, right? So before I show you the entry, I want to talk about having patience, right? Having patience is one of the most important things that you are going to do as a trader, because if you have your strategy, if you want to follow your strategy, and if you don't have patience, that simply means you are going to be guessing trades. Sometimes you are going to be guessing trades and you entering when you are not supposed to enter, and then at the end of the day you are wondering why have you lost so many trades in one day. It's simply because you are over trading and you are guessing the trades. Every time you open the chart, you just want to place a trade, right? So now the entry, you want to let the market move back into this zone, or in this case into this zone, right? So we want to see a move and a pullback, and then you mark this zone. You want the market to break it and pull back into this zone before you go and look for an entry. So in this case, this is what happened. We marked this zone and we marked this zone, and the market moves up and pulls back into this zone. What is the next thing that you see on this zone is candlestick patterns. So that's your entry trigger. So for the conditions, I said you want to see a trend and you want to mark these zones, and then you want to see the market coming back into the zone. For you to enter the market, you want to, for the entry now on the CEST, you want to see a candlestick pattern that shows you that the market, since it was moving into this zone has successfully hold the market. And this candlestick can be, number one, indecision candles like this one, a candlestick that have no bodies, or that have very long wicks and very small bodies, right? Or you want to see a bullish engulfing candle, or you want to see a hammer candle, right? So you want to see a candle that looks like this, or a candle that have got a small body and very long wick, or two candles that have the first one looking like this, being a red candle, and then the next one looking like this, being a green candle. That's your conditions. That's what you want to see. That's your end triggers. Once you see that, you want to buy. At the close of that candle, you buy. So in this case, you would buy at this line here. Once you buy at this line right here, right, now we go on our CEST, right? We have C, the conditions, we have them. The E, we have the end now, the candlestick pattern. The stops, what you want to do is, you want to, this is when you're drawing this zone here, don't draw a line, draw a bigger zone. So you want to make sure that the size of your zone here, your stop loss can be 2 times that zone. So in this case, I would put my stop loss just below this zone right here. You can also use the ATR indicator to calculate the ATR from here in terms of pips to where you want to put your stop loss. You can put 2 ATR, whatever you want to do, but basically what I do is just put the stop loss below this zone, and then we go to the targets. Right, so for the targets, there's two ways that you can do this. You can target the upper zone where the market got to, because your stop loss is here and your entry is here, right? So we have the entry, we have the stops, and then we have the targets, right? So you can use this zone here where the market passed, reversed on, or you can calculate 2 times the stop loss, 2 times the stop loss, and then you get your trade just like that. And in this case, you can see the market moved all the way to this zone right here, to this zone right here, right? So this was a very good trade. Let me do another quick example of a downtrend trade, so you can see where to sell again in this market. But the principles are very, very simple. So here's an example right here. The market is moving to the downside and it makes a pullback, right? Once it does, we said we mark this zone, and we are already in a downtrend, so we are looking to sell, right? So we see the move down, a pullback, the move breaking past this pullback. Now we are marking this zone right here. So you mark size of a rectangle that matches the last candle before the reversal, right? So in this case, it would look like this. So now what are you waiting for next? You are waiting for this market to reverse into this zone. If it reverses into this zone right here, that's where you place your trades. So in this case, you can see the market reversed into this zone, right? And when on this zone right here, what do you see? Let me zoom this in. You can see right here, this is called a bearish engulfing candle, right? So in this bearish engulfing candle, all you want to do is you want to sell at this point. Once you sell here, you put your stop loss above this zone, right? So you want to put it right here, and you take profits. I said you can put it below at this point, right? But if this is very close to your entry, you can put that 2 times the risk that you have. In this case here, you can see these are examples. Of course, it was a winning trade right here. So you sell here, stop loss, and then take profits down here, right? Now you can see that the next thing that happened after this trade goes below here, you could again mark this zone again right here. You can see the market makes a move down, pull back, move breaks again, pulls back into this, and created this big bearish engulfing candle, which was another opportunity for you to sell, right? So most people can have a strategy like this, but they cannot follow it. Why? Number one, you are lacking patience, right? Number one, you are lacking patience. You can't wait for the market to go in a trending market. You just want to buy any market. Whenever you open the chart, you want to trade, but it doesn't work like that. You have to wait for your entries to come to you, right? Number two, you need to understand that it is possible for you to lose 3, 4, or 5 trades in a row. It doesn't mean the strategy doesn't work when that happens. If you lose 2 trades, 3 trades, 4 trades in a row, just know that it is very, very common and it is very possible. Because whenever I'm backtesting strategies, I see a lot of times a strategy can lose 4, 5, 6 times in a row, can create a minus 10% drawdown, minus 12% drawdown, and then at the end of the backtest, you still can find that strategy being profitable. After seeing all those drawdowns and all those losses, you find out the strategy can still be profitable. So you need to follow the strategy. You need to have patience to wait for the market to come to you before you place a trade. So if you want to learn more about these strategies and more about trading mindset and things like this, make sure you you contact me, I will leave the link in the description, and I'll also give you trade ideas and trade setups on WhatsApp. Thank you for watching. I will see you in the next one.